In this video, guys, we're looking at how low leverage almost guarantees new Forex traders will survive. Hey guys, warm welcome to you. Okay, so table here, I want to run through why using low leverage is the best, almost guaranteed way for you to survive as a new trader. Now, I know it's a bold statement, but I want to show you why I think that's the case. Okay, so leverage is the amount of money that the broker will allow you to control, or the notional value of a position that allow you to control with the money you have in your account. The more leverage means the more money you can control, the bigger size positions you can take relative to the same amount of money you've got in your account. Let me explain with some examples for easy. So 100 to 1 leverage means this: for every $1 you have in your account, you can trade $100 of position. So if you've got $1,000 in your trading account, you can trade up to $100,000 or the equivalent currency of a currency. So you can see how that magnifies how much position size you can control. Now, the thing to point out here is that leverage is a good thing, and I'm going to talk this perspective from new traders. The new traders' number one goal is to stay in the game for as long as possible to learn, because as I've mentioned before, and by the way, if you're subscribed to the channel, I appreciate your support. Thank you. You may have seen me talk about videos where I've said, hey, listen, you're a new trader, all you've got to do is just keep sticking it out, keep trading, keep small, learn. Don't try and do anything clever. That's the name of the game, and this is what this is about. However, I also live in the real world, and the real world is, hey, at some point you want to start making some money. So at some point you want to start stretching the boundaries a bit. You want to start putting some chips on the table so that you can stretch your account. But the point is, you don't do that until you have the experience, you have the setups, you have everything in place so that you're a bit more confident and comfortable doing that at the right time. So with that out of the way, I'm not just trying to say, hey, we should do this and you should stick at this for the rest of your life trading small size. I get it. We want to make money, right? We want to make as much money as possible with the least risk as possible. There's a time and a place for pressing, and there's a time and a place for going a little bit more aggressive than maybe you should because you want to make a big jump in your P&L. I get it, but this isn't the time. When you're a new trader, you want to be in the game as long as possible. That's the number one thing that you should be aiming to do. And low leverage ensures that. Why do I say almost guarantees? Because if you are trading with low leverage and you're trading very, very small relative to your account size, you can screw it up again and again and again and again, and it will not affect you. You can have a massive run of losers, it will not affect you. And the reason I say almost is that almost because, listen, if you're scalping day after day after day, doing hundreds of trades a day, and you're really hammering it away, then of course that time frame is going to be contracted. So it almost guarantees it for most traders, or swing trading, day trading, low leverage up. Right, let me show you to the table. Let's go straight to the table. So in this example, right, we've gone long one lot of USD JPY at 120, okay, and we are long and it's fallen 1%, 120 pips. That's a day's range. You know, it's possible to happen in a day quite easily, right? So 118.80, that's 1% of 120. So look at the scenario we've got here. When we're using 100 to 1 leverage, okay, by the way, this is in dollars, ding, ding, ding. If we're using 100 to 1 leverage and we want to have one lot, and one lot is $100,000 basically, as it is here. So we can control $100,000 with one lot if we're using 100 to 1 leverage. So $1,000 margin. If we drop by 1%, so we've got one lot and it drops by 1%, and our account size, and if we just assume that's our account size, or assume that's the margin, we lose $1,000. We lose everything if we're 100 to 1, because that's what we're using to control it. We've taken the position size of 100,000, it falls down 120 pips. We're out of the game. We've lost that 1%. Okay, now if you look at 50 to 1, this is where it starts getting a little bit more interesting. We need $2,000 margin because it's half of 100, so you need a little bit more to control that same amount of money, right? This time, if it falls down, you're only losing 50% of that. You're not getting hammered for it. Now, 33 33 to 1 margin, a leverage, should I say, $3,000 margin, 33%. I'm not going to go through all these, but just look. When you start getting down to here, 10 to 1, 5 to 1, 1 to 1 is just an example, but 10 to 1 and 5 to 1, look, $10,000 you have to have up in your account to trade that amount of money. One lot, $100,000. If it moves 1%, you have only lost 10% of the $10,000 you put up. So assuming that was your initial account balance, you've only lost 10%. Now, only lost 10% isn't great, but it's a damn sight better than losing half of your account. So you can see why just a string of average losers could wipe you out very, very quickly if you're trading in this upper chunk of the table. So if you're trading quite excessive leverage or larger leverage than you really should be doing, you can see how really your losses are magnified, and you must expect to take losses, guys, when you're a beginning trader. That's almost a given. And so why magnify them? Why magnify the losses? You're going to learn exactly the same thing whether you lose 10 bucks or whether you lose 1,000 bucks. This trade is identical. It's probably going to hurt more, which is not what you want, because you want to learn the operational perspective of it whilst working on discipline. You don't want that intensity of significant cash loss for you. So keep the leverage low and just look at this table and visualize. Now, there are some, maybe they've changed now with new regulations, that we're doing 500 to 1, 1,000 to 1. And as tempting as it is to say, well, you know, I get a great trade on that, I can treble my money, quadruple my money, it's just a fallacy, guys. It's just, it's a trap that we can fall into as traders, because we all want to make as much money as possible with as little risk as possible, as little kind of work as possible. But we know that, you know, we have to put in the work. There's always going to be risk. A hidden risk of that is, you know, you're way too oversized. You want to put your stop really, really tight because you don't want to lose more than, you know, 200 bucks or something. So your stop goes tight. That gets pinged out straight away in noise. You lose money. You don't get to learn. You end up trading differently when you're using really aggressive leverage than without it. It just ruins the whole game. So low leverage, stick to that. Stick to as low as possible, the smallest account, the smallest position size you can trade as possible. Use the lowest leverage you've got possible. And by the way, even if a broker allows you to trade 100 to 1, the point is, if you have more in your account, like you've got 1,000 bucks, I know there's the margin requirement, if you've only got 1,000 bucks in your account, you're trading 100 to 1 if you're trading one lot. But the point is, if you've got 100,000 in your account and you're trading one lot, you're only trading 1 to 1. So even if the broker allows it, it's how you use it. You don't have to use all that leverage. You can say, hey, well, I've got 100 grand in my account. I'm only going to trade one lot. So the leverage becomes 1 to 1. Or I'm only going to trade X number of lots. You get the idea. So it's up to you to control the leverage. Don't just let it adapt to your broker to tell you how much you should be trading. Anyway, guys, low leverage, good way for new traders to almost guarantee that they'll survive for years to come. See you next one. Bye-bye.